Welcome to Capital Link's company presentation series.
Good day to everybody. I am Nicholas Bornodis, President of Capital Link, and I would like to welcome you to the 2025 Capital Link Company Presentation Series. In this series, company management highlights the company's current operations, business development, growth prospects, and sector outlook. We are privileged to have with us today Mr. John Lycouris, Head of Energy Transition, and Mr. Theodore Ted Young, Chief Financial Officer of Dorian LPG. Dorian LPG is a leading owner and operator of modern VLGCs that transport liquefied petroleum gas globally. The company's fleet currently consists of 25 modern vessels, including 20 ECO VLGCs and 4 dual-fuel ECO VLGCs. Now, Dorian LPG is listed on the New York Stock Exchange under the ticker symbol LPG and has offices in Stamford, Connecticut in the United States, Copenhagen in Denmark, and Athens in Greece. With a commitment to operational excellence and sustainability, the company plays a crucial role in the global LPG trade, supporting energy transition and emission reduction efforts. Now, in terms of logistics, we will start with a brief company presentation followed by live Q&A between our participants and the company management. Please feel free to submit your questions anytime during the webinar using the Q&A button at the bottom of your screen, and your questions will be replied in the Q&A session. And before we start, a reminder of the usual disclaimer that this webinar is strictly for informational and educational purposes. It does not constitute an offer to buy or sell securities or investment advice or advice of any kind. And of course, Capital Link bears no responsibility for its content. And let's begin our presentation. I will turn the floor over to Mr. John Lycouris and Ted Young.
Thank you.
Thank you, Nicholas.
Thank you, Nicholas, and thank you to the Capital Link team for putting this webinar together, and thank you all for joining us today. If you could advance to slide 2 quickly. There we go. All right, well, we went through the disclaimer, but as a reminder, we'll give certain forward-looking statements. None of that can be guaranteed. We'll do our best to make it right, but all the usual health warnings apply for any public company. So give you a brief overview, which Nicholas has already touched on. We are the second largest owner-operator of VLGCs in the world. VLGCs are the largest class of LPG carrier. It's very creatively named very large gas carrier. There are medium-sized gas carriers, MGCs, and small gas carriers. We're exclusively focused on this segment. It's the segment we think has the best growth and best economics because it's driven by long-haul trade in the LPG sector. As we kind of highlight here, we've got quite a young fleet, which for those of you who are been around shipping know well that it's an important piece of the puzzle to have younger ships. That's important because ships do have a finite life, but also younger ships tend to have the best technology, and that's something that Dorian feels very strongly about, and we'll get into that in a little bit. You'll note that from both a profitability and an environmental perspective, 15 of our ships are equipped with scrubbers, and one chartered-in ship is equipped with a scrubber, which allows us to benefit from a fuel price spread between traditional fuel and very low sulfur fuel. Again, this is a comment I'll come back to later on. And finally, we're a bit unique in that we operate the largest pool in the VLGC sector together with our partners at MOL Energia in Singapore. They're a subsidiary of Mitsui O.S.K., one of the largest shipping lines in the world. And the benefit, of course, is it gives us a presence in the Singapore market, which is very important. It gives them a presence in the European and the U.S. markets. And it's been a very fruitful partnership, and it's our 10-year anniversary coming up quite soon. If you could advance the slide, please. We recently reported our results for the quarter, so I just quickly highlight a few things One is, fairly healthy rates. The rates you see in the high 30s are, above the long-term average, which is sort of $33,000 a day. So we generated solid EBITDA of $45.2 million. We report a healthy cash balance, almost $315 million, and a very manageable debt balance. So if you look at our debt to total capitalization, we're about 30%. And if you look at our net debt to total capitalization, we're at about 15%. You'll also notice that we paid a dividend of 70 cents a share. We had been paying for quite a while at a dollar a share, but as we'll talk about later, our dividend policy is an irregular dividend. We do not have a regular dividend policy. There are a number of factors that go into our board's determination of the appropriate dividend level. And the 70 cents represents a mix of what our recent results reflect, but also our confidence in the long term, which is one of the reasons that you'll note that the dividend per share was in excess of the earnings per share earned. Next page, please. So again, what allows us to provide superior shareholder returns? First and foremost, for any capital-intensive business, we think we've done a good job of capital allocation. As our cash flows and results improved through 22, 23, 24, we were able to increasingly return capital to shareholders. About 620 million of that 850 was done in the form of dividends. We did a self-tender offer, which was for about 115 million, and the balance was open market repurchases. So we've been prolific returners of capital since our IPO in 2014. As you can see, we've reduced our share count significantly since our IPO. And again, we're always striking the balance between rewarding our shareholders from current results, but also making sure that we're marshaling our capital, because shipping is a capital-intensive business and the fleet needs to be upgraded and renewed over time. The other key piece of being able to do what we do from a capital allocation perspective is managing our balance sheet properly. I touched on our debt to total capitalization ratios, and our traditional credit metrics are all quite healthy. We're extremely happy with where our cost of debt is right now, which is about 4.7%. That's going to tick up a little bit at the beginning of the next quarter, beginning in April, because we had some really cheap hedges at 0.92%. That was our SOFR rate that are rolling off to be replaced by a hedge we put on at 2.85%, which is still about 200 basis points below where the SOFR is these days. We don't have any major balloon maturities until 2026. And the next major event on our balance sheet, which we're already well equipped to handle, is a new building delivery in 2026. That's the only ship we have on order. We go through a quick overview of our fleet there in the last box, but let me turn to the next page to focus on why those statistics and should be relevant to investors. Thank you. So obviously, we are aware, as is the rest of the world, about the desire for greener and less carbon-intensive shipping, and that's something we've embraced. And while it certainly has long-term benefits for the Earth, for us, it also needs to be beneficial to companies' bottom line. Unfortunately, most of what we're doing, if not all of what we're doing, really ticks those two boxes. So we've broken it down into four main categories of technical efficiency, operational efficiency, future propulsion, which is different kinds of fuel, and then finally commercial optimization. And it's really on the first two that we've done quite a bit. And the beauty of these measures that increase both technical and operational efficiency is that they're relatively low-cost items, and the returns have been really spectacular, very high ROIs. So whether it's things like muse ducts, which are a way to channel water underneath the hull to make the vessel more aquadynamic, or boss cap fins, or even retrofitting propellers, or having a more systematic approach to our hull cleanings on the operational side. none of these is a major capital expense, but the fuel savings have been tremendous. And fuel is our single largest item on the P&L. It doesn't get much focus because when we report time charter equivalents, gross freight or bunkers are subtracted from gross freight. So it's a big number that many folks don't focus on, but it adds a lot to improving our time charter equivalent results. And it's something that we'll continue to do. And of course, it has the benefits of reducing our emissions. And so it's really a virtuous cycle that we're on. And my colleague, John Lycouris here, among some of his other responsibilities, is head of energy transition, and he's spearheading these efforts, which require a unique blend of technical expertise and sort of regular old-fashioned business acumen. So we've really done quite well with these efforts. Next page, please. So quickly turning to the market, I'm going to step back and just remind those of you who may be less familiar with our sector what we do. We ship LPG, liquefied petroleum gas, which is propane and butane. That is obviously distinct from liquefied natural gas, which is sort of the big brother that gets most of the press. The beauty of propane and butane compared to, say, LNG is that the capital intensity is much lower. They require billions of dollars to build export and import facilities. We require 50 to hundreds of millions of dollars to build those facilities. Our ships cost much less to build and to operate. And our product is extremely well suited to emerging markets where we're seeing high per capita GDP growth, large household formation, but also perhaps limited budgets for infrastructure. And so we've seen over the years, when we listed Dorian LPG in 2014, the largest importers at that point were Japan and Korea, and now the largest importers are India and China. What is LPG used for? Most of it, around 45–50% of it, is used for domestic use, heating and cooking. Those of us in the U.S. know that we frequently use it to cook on, grill on, heat our pools with. And that's the case in a lot of the world too, but it's the major fuel source, for example, in India, where it's replaced a lot of biomass, wood, dung, all sorts of other, sort of more environmentally hazardous products. So it's contributed significantly to better health outcomes there. And the UN itself has actually been focused on it and made a point of it. The other main off-taker from a sector perspective is the petrochemical sector. And petrochemical has two drivers to it. One is traditional steam cracking, which is what many of us who followed the chemical sector over time are used to. One simply cracks mostly naphtha into its component parts to make ethylene, which goes into the plastics chain, or propylene, depending on the cracker. It's always been the case that when LPG, propane and butane, are cheap compared to naphtha, that chemical plant operators would shift out part of that feedstock slate up to 10 or 15%, depending on the technology, and replace it with LPG. So that's great for the business. It's obviously far more environmentally friendly than naphtha, but it was always subject to price swings. What we've seen emerge over the last 10 years has been propane dehydrogenation. Propane dehydrogenation is a direct, on-purpose way of turning propane into propylene, which again is a building block for plastics. Unsurprisingly, the Chinese have taken the world lead in that market, but they're not the only ones. There are PDH plants all over the world. And PDH is actually a fairly old technology that was really only made possible by the emergence of the United States as an export powerhouse. U.S. LPG is priced at a significant discount to its Saudi Arabian cousin, and therefore, at those lower prices, it's enabled PDH to really take off. And so, again, looking at what we see in our business, we've witnessed a lot of growth, which we'll get into quickly. But the main trade lane that's really now responsible for the vast majority of our business, or everyone's business globally, is the U.S. Gulf to Asia, particularly China. usually going through the Panama Canal laden, not necessarily in ballast condition. We've seen a significant increase in demand from Northwest Europe since Russia's invasion of Ukraine in 2022. And we still see good demand coming out of the Middle East, typically going to India, but also going to some of the other Southeast Asian countries, given the short transit times. We'll talk a little bit more about the Panama Canal when we talk about our rate history, but as we note here, the VLGCs have low priority, meaning we are not allowed to pre-book slots at the Panama Canal, which can lead to some delays. Delays are good in our business. It means there's fleet length, which means there's fewer ships available to lift cargoes, which means that we have a little more pricing power in those situations. Next slide, please. As you can see here, the global LPG trade, seaborne trade, has grown really rapidly over time. And that's been a function of the drivers that I talked about. The US, which is in the lower left-hand side, increasing its production and export capacity substantially from since 2014. In 2014, the US exported about 4 million metric tons of LPG, imported about the same amount. And you can see that just 4 short years later, it exported 32.3 million metric tons. Again, that's been at a lower cost than the Saudi market typically made available, which is not surprisingly generated additional demand. Exports out of the AG, I think where you see that big jump in 2022 of about 6.5 million metric tons is really ultimately driven by some of the cargoes that were coming out of Russia from the port in near St. Petersburg called Ust-Luga, getting displaced by the Arabian Gulf as well. So they've been on a pretty steady tear as well, with good growth. So again, we've got 2 main export basins, the US and the AG. There are secondary or tertiary markets too, Mediterranean, Norway, the west coast of Australia, to name a few. So we aren't beholden to just those 2 markets, but those are the 2 main export basins. And again, the main import markets, next slide, please. The main import markets you can see are really in Asia, and so that continues to be great for our business. Long haul trade, VLGCs are still the most cost-effective way to ship a metric ton of LPG. And again, you can see from the growth statistics that it's been a good run. We expect it to continue to grow because it's cheap and it's environmentally friendly. And it meets the needs of a lot of emerging markets for both heating and cooking, as well as emerging chemical technology. And plastics, as we all know, continue to be an important part of manufactured goods, whether they're consumer, industrial, or whatever. And looking, again at the trends here, obviously the U.S. quote unquote market share has continued to grow steadily. And China continues to take the lion's share of the product in Asia, but India is a very close second. So obviously, a lot of folks are wondering what's going to happen with the new administration. It's a bit early for us to say. We can say that in 2018, when China put retaliatory tariffs on U.S. LPG, it really had no impact on global trade. What we saw was simply that U.S. cargoes that had been going to China simply went to Korea, Japan, and India, and the Middle East cargoes ended up going to China. So we're hopeful that if it comes to that, we're hopeful, obviously, we don't deal with the trade war, that the market will similarly react. Things have changed a little bit. China is 40% of world demand, and the U.S. is basically about 50% of world supply. So we both need each other. So we'll see how things go. We're also hopeful that the Trump administration's maximum pressure sanctions on Iran will have an effect. Iran is actually the largest exporter of LPG from the Middle East. They exported about 11 or 12 million metric tons, which is actually more than Saudi Arabia. All of it goes to China. All of it goes on ships that are in the dark fleet. There are about 51 of those or 55 of those, depending on who you talk to, which corresponds to probably just shy of 15% of our global fleet. So if that trade ceases and those ships are unable to trade, that would obviously be really helpful for the rest of the VLGC market, particularly if Iran later comes in from the cold and ships on traditional, modern, well-maintained vessels. Next slide, please. Turning briefly to China, you can see that we've enjoyed really steady growth there. Again, petchem demand, given the industrial economy there and really the export economy. So while we do concern ourselves with the state of the domestic Chinese economy to a certain extent, LPG imports appear to be driven more by export demand. So, again, subject to trade tariffs and trade relations, as long as the U.S. and Europe continue to purchase consumer goods and industrial goods from China that are made with plastic, we feel reasonably confident about the long-term prospects for our business. Next page, please. So a couple key things that we look at in our business are the ARBs, the arbitrages. And one is the East-West ARB, which is the graph depicted on the top. And that shows you simply the landed price in the Far East, less spot freight, less terminaling fees, which is the gray bar. You'll notice that gray bar got fairly wide for a while, and that meant that freight rates sort of had to contract a bit. And that's what we're seeing. That's what we saw in the last couple of quarters. But as you can see towards the end, it's starting to narrow again, and we hope going back to historical levels. That expansion was driven by Hurricane Beryl, some planned outages in the Gulf, and then a force majeure event at one of the export facilities in the Gulf, and so that allowed terminal operators to increase terminaling fees they were able to charge, which meant that there was less profit, and that usually will get balanced some way in the equation. In our case, in this case, it got balanced on the on freight rates. On the other hand, as we said, we've seen terminaling fees returning to more typical historical levels, and vessel utilization being solid. So it gives us some cause for optimism going forward. The other main ARB that we look at is the propane naphtha spread. And when that's negative, as it has been for most of that time series you see below, that's generally very good for the LPG trade, particularly when it's $50 or more. So, obviously there are other factors that drive rates, vessel supply being the main one. But, this continues to be a nice part of the trade, the petchem piece, and has grown rapidly. One, because the naphtha piece is obviously been uncompetitive compared to LPG, but also because PDH is growing, a growing portion of the pie, and PDH there's no competition from naphtha for PDH plants. So great thing for our business. Next slide, please. Again, this is something else that's important, is looking at ethylene margins, and we look to see where can producers make the best money. Is it with propane, naphtha, or butane? As you can see here, the propane and butane numbers look quite favorable to the naphtha, and that's obviously good for our business, being in the business of shipping those products. And again, naphtha is an oil derivative. It's not particularly environmentally friendly. Sure, our product is also, in some cases, an oil derivative or also a natural gas derivative, but we have substantially lower SOx and NOx emissions, much less particulate matter. So, for that reason, LPG is classified as a bridge fuel by the UN, unless we really firmly believe that LPG is part of the solution going forward, and will be an important part of the energy mix going forward. Next page, please. Turning to just what we've seen in rates. For those of you who followed the sector, we enjoyed quite a run through 2023, with rates getting up to $150,000 a day. On a business like ours that really costs about $26,000 a day in cash to run, that generated obviously really favorable free cash flow to equity. That was largely driven by the drought in the Panama Canal, which really limited the number of transits that LPG ships or any ship could make, and that created fleet length. It meant that certain providers, many times you wanted to go around either the Cape of Good Hope or go around South America because you simply were not going to get a slot in good time, and you wanted to get back to the U.S. Gulf to load a cargo. As it rained in Panama, and who knew that the rain in Panama could matter so much? The main source of water for the canal, which is Lake Gatun, sort of refilled, and we saw a correction in rates. Nonetheless, as we look ahead, let's look to the next page, please. Thank you. As you can see, we took a lot of new deliveries in 2023. The sector seemed to have absorbed most of those during 2024. It was masked a little bit in 2023 because of the Panama Canal drought. But looking ahead to 2020, this current year and even 2026, we have a pretty moderate order delivery book, and we've also got, again, we feel pretty good about our trade. In recent history, Seaborne LPG trade has grown at high single-digit levels. As you see on the lower left-hand side, many ships are getting older. That means that, in many cases, ports in the U.S., Western Europe, and Japan and Korea will not accept them. And so as a result, at some point, they will have to leave the fleet. They can obviously join the dark fleet serving Iran. But on the other hand, we do hope to get some relief from scrapping in the future. So looking at next slide, please. So looking at our fundamentals of our business, and LPG is a clean source of energy. It's got great pull-through demand from both the retail sector as well as the industrial, i.e. chemical sector. We've got a manageable order book, and that we believe sets up for a healthy rate environment going forward, and solid cash flows as a result. So we have a very constructive outlook for our business for the coming 12 months, let's say. And with that, I'll conclude my remarks, and we'll open it to questions. So we have a question on our dividend policy. Our dividend policy is irregular. Just because we happen to pay $1 a share for so many quarters was simply a function of the fact that that was the number that our board settled on when looking at our cash forecast, our balance sheet, our capital needs, the overall macro environment. And going forward, that policy we expect to remain in place. It's always subject to change. The board could elect to do something different. But we believe that, as you saw from the prior chart, that VLGC rates can be quite volatile. And it's very hard to promise a regular dividend to shareholders when you've got volatility in rates. Also, there may be investment opportunities that come up, and we want to be in a position to pounce on those. At this point, we feel pretty good about our cash balance and our debt availability, that if we find an opportunity, that we would be able to react to it. But again, we can't. We've got to be mindful of balancing rewarding shareholder returns with growth opportunities. But again, when we look at our total shareholder return, which is how we measure ourselves, we know that the dividends play an important part in remunerating our shareholders, and that's something that our board appreciates as well. Next question is about the tariffs. Will the tariff war impact business? I touched on it in my remarks, so I'll just repeat what I said. But essentially, at this point, we don't know what. And thus far, LPG was excluded from the first round of Chinese tariffs that affected LNG and oil, not LPG. In 2018, the Chinese did put retaliatory tariffs on the U.S. on U.S. sourced LPG, 25%. Again, seaborne trade wasn't really affected. All that happened was the Chinese began sourcing their cargoes from the Middle East, and the U.S. cargoes that had formerly gone to China were going to Japan, Korea, and India. So we don't know what's going to happen yet. We're hopeful that any impact will be relatively mild. John, you want to do the next one?
Sure. We have another question, and it talks about Beaumont, Texas, which is an LPG port, and that there is going to be an ammonia plant there. Yes, the ammonia plant is probably going to be mostly for export of ammonia, either as a way to transport hydrogen more than being used as an alternative fuel for the ships. The engines for ammonia are not ready yet. They are close to completion, but not yet completed. We perhaps might have some more news next time we speak later this year, but right now those engines are not ready, so we cannot start thinking about ammonia as an alternative fuel at this time until the engines are ready and they have been tested, and we know that they can be used for commercially for the ships. So that's,
Did you want to
that's the answer. And I did want to add that for the time being, on the tariffs, there's no tariff on LPG.
Correct.
For the time being. It has not been levied either by China or neither by the U.S. levying anything.
Yeah, there's no export tariffs, no import tariffs
on LPG. So for the time being, we are free of any tariffs for the product.
Did you want to comment more broadly on ammonia? It's a cargo and as a fuel, maybe?
Yeah, thank you very much, Ted. Yes, for reminding me. We are building a ship. The ship that we are building in 2026 is going to be an ammonia capable ship, meaning she can load either LPG or ammonia. And we are discussing full cargo of ammonia or full cargo of LPG. These ships are built with an idea of trade potentially building up in towards the end of this decade in ammonia as a cargo, and therefore we have not only are building that ship, but we have commenced upgrading a few of our vessels to be able to load ammonia as cargo, because we think that there will be projects that will start soon, and we wanted our fleet to be ready in advance of any potential projects being ready, so we can commercially make them attractive to the trade. We think that ammonia will build up, and it will build up very fast, because that will be probably the transition from the carbon era to the hydrogen era, and that means that we will be changing the mode of fuel or energy used. It's going to be more towards hydrogen rather than fossil fuels. So this is the reason why we think ammonia will be used, and it's already starting to be used as a co-firing for power generation along with coal. So we think that ammonia has a good future as a product to be used in the future for carbon-free for its emissions, because the emissions are carbon-free, CO2-free.
Yeah. Thank you. Next question was about export capacity. Questioner asked that we noted that export capacity in the U.S. Gulf seemed to be getting towards nameplate capacity. Is that true, and what does it mean for your business? So I'd say there's the short answer to your question is that there were some reductions in capacity following Hurricane Beryl and an outage at the Energy Transfer Partners facility. So that actually reduced capacity. If you look at more theoretical capacity, we're actually fine. There's still some room. However, you're right that we are bumping up against it. Fortunately, however, There is already well-known planned capacity that's coming on later this year in the U.S. Gulf. Our full investor deck, which is on our website, we've just sort of given you some highlights, has the details there. And we were actually quite pleased to hear, as some of the midstream guys reported earnings just in the last week or two, that they continue to see the same growth trends that we're seeing in LPG. EPD, Enterprise Partners, announced that they continue to build, expand their Natchez River terminal, which is ethane, but also propane. And so we look forward to more growth there, as well as some expansions they're doing at on some of their more upstream facilities, because again, in the Permian play, they're continuing to see a lot more gas, propane and butane coming out of the ground, and that continues to be a great source of opportunity for the midstream guys. EPD also highlighted that they expect to have opportunities across all three of their export facilities from more of a brownfield perspective, and they've been able to contract significant amounts of that capacity in advance. They have great businesses, right? They're able to not actually begin construction until they have 80-85% of the capacity contracted, and that's continues to be the case as they continue to see growth. ONEOK and MPX also announced that they're going to build a new facility in the Gulf that should come online in 2020, early 2028. And it's again, it's a $700 million facility. Sorry, a $1.4 billion facility, which is quite large, going to be on 50% by ONEOK and 50% by MPLX. But again, you compare that to the capital costs involved with a Cheniere or a Venture Global, or any of their export facilities. It's really quite, LPG is pretty cheap by comparison. So again, we're seeing some additional capacity coming online later this year, and then definitely more into 26 and 27, both export capacity as well as fractionation capacity. Fractionators being the things that take the natural gas liquid that has both methane and propane and butane and some of the other NGLs, and splits it into its constituent parts to then be sold accordingly. So yeah, we do see that issue as well, but we don't see it affecting trade given the announced capacity expansions. Last question appears to be about our new build and any financing. We don't have any committed financing yet for the new building. We are talking to our banks. We're in a good position. We've got a good relationship with our banks, low leverage, and so feel pretty confident that we'll be able to find a good solution with an appropriate amount of leverage as we look forward to taking delivery of that vessel in 2026. Looks like that concludes our questions from the audience. Thank you all for your attention and for asking such good and thoughtful questions. With that, I'll turn it back to Nicholas.
Well, Ted and John, thank you very much for joining us today for this very informative presentation. Thank you to everybody for joining. Thank you to the two of you. And as a reminder that this presentation will be available for replay upon demand on our YouTube channel and also on the capitalinkwebinars.com website. So thank you very much and have a great day.
Thank you. Bye-bye. Bye-bye.